Unlock your potential with a comprehensive suite of investing tools and expert education with GammaEdge. Start your free 14-day trial today. Hey, good morning, everyone. This is Paul here with GammaEdge, coming to you. Let's see, it is Wednesday, 15th of November. I had a number of requests to take a look at how we do the morning process. So this is a capture of the morning routine. Obviously modify it as you see fit to fit your trading style. Before we get started, make sure you read this, pause your players here. Very important to you, very important to us. Taking a look at everything, we start off with the market model. So I go through and I take a look at the cumulative tick patterns, and we do that summary here. This is all posted in market status. We come up with where are we in the overall continuation day or trigger day, and make sure you understand this because this really forms the basis of where the edges develop here. Next thing I look at is I'm trading a couple key strategies, and within the Discord we are supporting these strategies. Won't always produce these every day, but for today just want to show that the strategies do have a positive edge. I've isolated the various tag combos that are applicable for today, and so just keep abreast of this, keep aware of this, just so you understand where we're at in the bigger picture. As I said, go through market status. CT obviously had a strong day yesterday. That is a continuation day up, because you can see the previous day was up. The railroad track pattern, continuation day up, you can see that. We actually had a conversion 2 days ago. Yesterday was very strong, and now you see why we call it the railroad track pattern. And then here, the ribbon, we had a crossing yesterday, and that is basically nailing the bear coffin shut and opening the door for the bulls. Now, it'll be important to remain above this, to have this continuation where we have these positive slopes, and you can see how these are starting to converge. That'll be a confirmational signal for the long term, approximately 2 week and beyond type of traders. This is where I personally have moved some of my longer term money, my retirement monies and things, into the overall market, and this would be a confirmation type of approach there. When we start getting the two slopes up, that is a bullish tendency, but always be aware that we can fail that and pull back down. In fact, this is the second attempt above the ribbon. We'll see if it continues. If profits are taken off yesterday's very, very strong run, it's very, very possible that we could pull back and we could fail this bull again, etc., etc., etc. The composite view, you should train your eye. We post this in the Discord. We have a trader, G-Trader, who streams this in voice every day, and that he can, and keeps you abreast of what's happening. This is the composite of the previous three signals, so just make sure you're aware of that. Summary for today, I go through and I isolate each of where are the transition levels, where are for both GEX and DEX. I look at where COTMP is, COTMC. If you don't know what those terms are, they are unique to GammaEdge, and they're pretty important. So I would urge everyone to learn the vernacular. We have a cheat sheet you can access through the GammaEdge lab, and of course that'll help you get oriented. I'm going to shell out here, and we'll go through how we actually look at each of the individual signals here. So give me a second to get out of this slideshow, and let's just take a look here at effectively what we've got going. So I'm going to start off with the PM structure. The PM structure, we isolate from the combo structure. So we have in the SPX, we have both AMs and PMs. This is important. They trade very differently. The AMs are considered more institutional monies. It's slower moving. We've tracked this for 2 years. We can prove it. It's something that we think is unique to GammaEdge, and it actually makes a big difference in how we approach the SPX. So with that said, SPXP, and I've got all the expiries turned on. First thing that I'm looking for are where is the different transition area. Now we draw the gamma transition or the GEX transition here in white, and you can see 4420, 4350 is that zone. It is the range that it and all the strikes above have a positive gamma exposure, and it's also the level at which it and all the strikes below have a negative gamma structure. So P-trans here, N-trans here, you'll hear that term over and over within the Discord, because one of our key strategies is tied to the crossing of P-trans and then going up to what we call P-gex, which is sitting right here. So that's a key key thing to denote. Of interest is that the delta exposure, which is really controlled by the net OI of the structure, is coincident on P-trans for the GEX structure. And so you can see that too is 4420, and that is the structure where it and most of the strikes, you can see a large number of strikes are net calls above us. That'll be positive delta exposure. So as price moves through those areas, what will be in control? Will it be a net put or net short deltas or net long deltas? In the case of the 4515 that's up here, that is due to the JPM structure that exists at the end of December. Yes, December, and it's already rearing its head. We track known short open interest. We denote it within the table, and it will not tie to your open interest chains. So don't ping us on that, please. We know that is by intention, and we track all of that so you don't have to. So positive DEX starts right at 4420. Little different on the downside than the minus trans that we see or N trans that we see. We actually see negative DEX picking up here right at 4380, so very tight range. And so for today we would be looking at 4380, 4420 for the DEX range, and the white box here indicates the P-trans to N-trans range for GEX. The significance of these is that if you start crossing into the negative DEX area, puts are going to win the day. And so what's going to happen here is that these folks are most likely going to get scared below 4491, which is right into this area right in here, 4490, 4491, as the yellow line, which is our spot price, falls. People will realize that they're losing some of their profits. They'll start monetizing. That could push us downward. And as we start getting into this area, we believe sentiment will change. So just keep track of that, and we do. So taking a look at the 0 DTE here, when you isolate just the single expiry for today, you can see the transition tightens. We've got that 4500 level, the 4480 for the GEX transitions, fairly clean. All right, you can see that. We do have a few outliers which are outside of the NGEX and the PGEX areas. That's what these two bubbles on the left-hand side indicate. And we have our 0 DTE call open interest target for the upside, which is very, very different. But this is the level with the largest call-dominated open interest for today. We don't even see the POI level on here. It's well below us and is not in play for today. Of key here, transition is within the GEX transition area. That's important. That starts the day literally with very, very little pressure in terms of gamma or delta. And you can see that right here. The net GEX has got a 0. It's transitioning right there. And you can also see delta is also at a nodal point, or what we call a delta node. And it too carried across the overnight with very, very little delta exposure. We see this all the time. We call these parking zones. Identifying those parking zones is a little more difficult, but I would urge everyone to train their eye to start looking for those gamma nodes and delta nodes, because they are important for this exact reason that you see here. So, the key takeaway here for today: identify your plus GEX level, your minus GEX level, or the keys here, and we develop the if-thens based upon that. Taking a look here at the 1 DTE, you can see COI moved up compared to where we were here on the 0 DTE, so that is an advancement. You can see the overall transition range. You can see where the gamma levels are and where the key strikes for tomorrow are. Again, we want everyone to start looking for where are those gamma nodes and delta nodes. That'll be important in the latter part of today. So it pays well if you can identify those nodes, because the market tends to drift towards those gamma nodes and delta nodes for overnight parking. You can also take a look at, when you combine expiries, what is remaining for the balance of week. That is a chart that we show. Same analysis concept. And then we take a look into next week, same analysis concept. Now, these are all with the SPXP, because today, or this week, excuse me, is a expiry week for the monthlies, I'm going to flip over to the SPX. The SPX is the combo of the AMs and the PMs. And when we do this analysis for next week or for this week, especially this week with Thursday, tomorrow being the last trading day, and Friday being the settlement day for the AMs, you get to see what the institutional component is in addition to the PM component, which I was showing you earlier. And you can see the distribution is very different. That's important, or we believe that's important, because we are seriously call dominated to the south with no chance of put starting to take control, at least for this week under this structure. It can change, but it doesn't change on a dime. So navigating the structure is important, and this is part of what we do. To the north, you can see that we have a lot of call speculation. We got in the money calls, or excuse me, out of the money calls, which are dominant, and you can just take a look and do a mental comparison between the call open interest and the put open interest, and you see the calls are winning the battle here to a point. The reason we have red up here means that the puts, which are in the money, and moneyness matters, are controlling the overheads. But we do have the potential to push higher, and really, if the bulls want to take it higher, there isn't a lot of resistance to go higher, except just for fear and greed within the market. And you can see the different levels of where monetization could potentially occur. 45.46 is the key upside, which is going to be up in this area. So you can see very clearly that we have good runways all the way up to some very dominant targeting to the north. Again, taking a look at next week, this will be the exact same presentation as the PM. You can go back in the video and look at that. And the reason this appears like this is because there are no AMs for next week. So once you are out of the expiry week for the AMs and you select expiries here, you might as well just use the PM complex, and that's exactly what we do. Another thing that I look at is I look at just the institutionals. And so when you look at just the institutionals, this is separating just what we call the SPXA. The SPXA is a GammaEdge symbol also, just like the SPXP, and this is where we isolate just the AMs. And you can see that here we have just the monthly expiry over here on the right hand side. This is a very bullish picture. You can see that with a lot of green here. The institutions are net green on deltas as far as the eye can see, so there's a lot of speculation to the upside. And you can see that here just looking at the call open interest and the put open. Call open interest for out of the money calls is dominating the in the money put open interest, yet we have green deltas all the way up the table. That's pretty good. Now, of course, there are a few nodes, and we want to pay attention to those, just like what we were talking about before. I do like to isolate the November. I want to take a look and see what is in play, and that is this month. In fact, it's this week, so that's important. And again, looking at transition, looking at the structure, looking at the overhead, all very, very important. Now, where are they rolling to? They're most likely rolling out to December. I'd like to see how December changes day over day. So one of the key things to look at, very fat transition. It means it's not very decisive in the big picture of things. Also here you can see some nodes that have developed, and we'll have to pay attention to that. But overall, the deltas are green. We're in a green structure for net OI on a single expiry. You can do the put open interest, call open interest, or comparison here to get you the net OI. And right now, for all intents and purposes, institutions are also bullish into December on net. So that really summarizes what we look at here. I pay most attention to the SPXP. I also will take a look at the SPY, the Qs, and IWM, and I'll take a look to see how they align with the SPX. The two that I think are most important, of course, the SPY is very, very important in how that plays, and you can do the exact same analysis there. I would urge everyone to do that. And if you are favoring the Qs, technology, I would ask everyone to do the same analysis there. You can see right off the bat, just going through all expiries turned on, the Qs, the SPY, and then taking a look at the SPXP, transitions are very different. So there's a lot more uncertainty in the SPXP or excuse me, the SPY, and the Qs relative to the SPXP, and that can be important. So with that, I'll leave you. We'll go into another video we'll produce is how we actually do the if-thens, but I just want to show you, this is the foundation of setting up the if-thens. You have to master this before you can start doing the if-thens correctly, so at least from our perspective. So I hope this was helpful. If you have any questions, we'll see you in the Discord, and feel free to post them. Thanks, everyone.